Welcome to TradingView, where we're here with Stephen Woodcock, who's a senior FX trader at Plutus FX. How are you today, Stephen?
Very well, Zach, thank you.
Right, we're studying other people's homework today, seeing what they have, what their views are on key currency crosses. Euro CAD by Anil Mangal. He was looking for the, I suppose, this cross to sell off quite sharply eventually.
Yeah, that's what they're looking at now. For me, I'm looking at oil really on this cross. So I'm of the thought that oil goes lower, so the Canadian dollar weakens. So, you know, I'm of the thought there's possibilities we see this actually trade higher. But this could obviously be on the euro side of the trade, which, you know, we're waiting, I suppose, for does the euro break below 108.5 against the dollar, which, you know, in that scenario, we possibly could see it trade lower. But I have to admit, I actually don't think this cross goes very far from where we are at the moment. And if anything, I slightly favour a little bit of upside. But the charts at the moment are, I'd say the chart is a little bit misleading.
So you can see where he's getting it from.
I can see where he's getting. I can see what he's doing.
But it's all about 108.50 probably on the euro dollar, and that's all roads lead to that. And if that goes,
well, I'd say roads lead to that. But we've got to watch oil because at the moment the Canadian dollar is mirroring oil, and my thoughts on oil is that it goes down. We are finding support where we are at the moment, but I'm of the thought that oil goes down to $35. Which means the Canadian dollar weakens, which effectively you'd tend to see more of a move in the Canadian than the euro. But that's, you know, like I say, it's all dependent with what we've had out this week. Who knows the volatility we're going to see over the coming weeks? So for me, I think, I mean, there's a lot of preemptive lines on that chart, which you know my thoughts on that. So for the moment, I'd say the chart's unclear. I could put projections all over that chart, yeah, and they'd mean nothing. And I think that's where we are with that.
Okay, let's go on to the next situation, which is dollar yen by Markame. Here we've got all sorts of colours and projections there. Maybe you can tell us what you think.
I wish I knew. No, I can see where he's going with that. There's there's a bit of an inverted head and shoulders at the bottom there, which is marked by the butterfly pattern, I'm guessing. I'm quite friendly towards commodity currencies at the moment, but we're in for a bit of an up and down period over I'd say up into the new year, maybe January, February. So until, you know, policy is clear out of the US, what we're going to see, and I think we're dollar dependent at the moment. And even though I'm friendly towards things like the Aussie, the Kiwi, things like that, yeah. But with this, the dollar yen, I'm looking at it. I'm thinking, you know, my thoughts on it. I think dollar yen goes a lot higher. Okay, and I think this probably is going to trade up much higher, 125. For the moment, that sort of inverted head and shoulders, it looks strong, but I'm not getting carried away yet. Yeah, I think this goes higher, but there are going to be levels. We're going to be hitting numbers where we are going to see retracement. I'd be very careful about saying, right, okay, we've done that, it's going up. Yeah. So there's a two-way market at the moment, and it is going to work. There will be a two-way. This isn't going one way.
Okay, let's go on to the next situation, which is the Kiwi versus the US dollar. Another of these colourful pattern setups. Is that something you agree with?
I'll be quite honest with you. See, the Kiwi for me it's a strange beast. There's not a lot of depth in the Kiwi, so it doesn't actually take very much to throw this around. What it does sometimes it will mirror the Aussie, things like that. Commodity currency, which obviously, you know, impacts on it massively. The chart he's got there. Am I looking at that chart? I mean, because I'm looking at that chart and he's telling me it's going down. Yeah.
Yes.
It does look. There's so much on there. I'm
baffled. Yes.
Yeah, but I'd say for the moment, yeah, it does look for the moment that goes a tad lower. But what I'm friendly to the Aussie, so perhaps that's a
so maybe it's going lower, but not as dramatically. It'll be just a gradual retracement.
Yeah, but perhaps it's a buy Oz Kiwi rather than, I mean, Kiwi dollar maybe, but you know, Kiwi Oz is a big trade. There's plenty of depth through that. So, but for the moment, yeah, maybe the chart's not in that one isn't too bad actually.
We'll see if FxWirePro gets that right. Finishing off with Aussie dollar, US dollar by Rothschild Yang. Going short at the higher levels?
Yeah, it's a range trade at the moment. We've still not broken the highs. There was yesterday we broke out towards, or yesterday and the day before, broke out top side of an ascending triangle, and it failed, came back in, and we've now gone down and we broke through the bottom end. There's two-way business in this. What I think, that actual chart to me, if someone said to me I had to put money on that, I'd say that's going up. Okay. Now, what we did, we haven't broken through the previous high. We've traded lower, haven't come down to the previous support. And I'd say for the moment, I'm friendly towards the Aussie dollar. And I think we've got commodity currency movement going on. We're going to get that in the new year. We're still trading the dollar at the moment. What I think is we'll see this trade higher, but it's going to be a very slow burner. Yeah, and because I'm dollar bullish, but I'm also friendly to the Aussie. I think that's just a slow burn. It's one to maybe put in your back drawer, leave it there, and have a look at it at the end of next year.
Excellent. Stephen Woodcock, Senior FX Trader at Plutus FX. Thank you very much for helping us with TradingView.